loss limit, stop loss market. This is what I was about to explain. GTT. Is it there in your notes? GTT is what? Good till triggered. Good till triggered means what? Assume that today the stock was at 100. We put a trigger price at 95. It came down and down and down to 96. Didn't hit 95. What will happen? It won't be triggered. It won't be executed. The order will be automatically cancelled. One more time. If the order doesn't get triggered, it will be automatically cancelled, or we will have to cancel it. Automatically cancelled at 3:30. Or admin time, I don't know. I've not worked at the back office. Maybe maximum within half an hour. 3:30 to 4. You remember 3:30 to 4 that aftermarket orders and all that. It will get automatically cancelled at that time. Okay. But then what is GTT? GTT is good till triggered. So if I were to put, so it's not necessary. It has to be a stop loss, right? It's a normal buy price, or it's a normal sell order. Normal buy order, normal sell order also. Right now, assume that Jubilant Foodworks is at somewhere around 2,600 rupees. Madly it has corrected from almost 4,500 to 2,600 rupees. And I want that if it comes down to 2,400, I want to buy. But assume that daily I don't get time to watch. What can I do? Place a GTT. What is GTT? Good till triggered. It should stay in the market till it is triggered. At what price? 2,400. Okay. At the end of the day, today the price of that stock was assumed 2,500. Did it get triggered? Will it get automatically cancelled? No. Why? This is a GTT order. It will be good. It will be good means what? It will be alive. It will be active till triggered. Now he's going to ask, what if it doesn't get triggered till 1 month from here? Then what? It will go away. It will go on. 6 months. Correct. It is valid till 1 year. GTT order is valid till 1 year. Okay. So you can place orders. You can place GTT orders. You always have that wish. I would, if I had got an HDFC bank at this price, मजा आ जाता था. And when it comes at that price, you'll be like, और नीचे जाएगा. Not further, right? Everyone agrees with me. So what can you do instead? You can place a GTT. What is that? Good till trigger. So that your emotions don't come in between. You genuinely feel that HDFC current market price of HDFC bank is around 1,400. That is around 1,400. Okay. And you believe that 1,200 is a fantastic price. Put a GTT now. Buy HDFC bank at 1,200. When it comes down to 1,200, it will get automatically executed. You must have funds in your account at that time. Huh? Funds will be blocked there itself. Fantastic. I have not placed so less amount of GTT, so I was not sure about that. They get blocked immediately. Fantastic. Okay. So good input. He's saying that the funds will get blocked immediately. तो point तो tension नहीं है. So that at that day you will have those much funds or not. Okay. So that is GTT for you. I understood what is it. Simple, na? So good till triggered. Instead of that, can I say it's like active till triggered, till executed, active till triggered. So if you want to write down simple, instead of good, good means what? It's active. It doesn't get auto cancelled. Active till triggered. Correct. In Marathi saying माझ्यासाठी गळ टाकून ठेवल्यावर काय? It's like keeping a, instead of masa, it's like keeping a mouse trap. कारण माझ्यासाठी गळ टाकणं एवढं इंग्लिश मध्ये चांगलं नाहीये. त्याला इंग्लिश इक्विव्हॅलंट. I don't know the English equivalent of that. Huh? Bait का? How do you say that in English? To bait the fish. आणि ते कळलं. Bait म्हणजे lovely bait असं नसणार. But to bait a fish. Okay. To bait a fish. My English is okay, not so good. Good, I got this input. So it's like baiting a fish. Correct. That's like GTT. Okay. Then like the example, another example is like a mouse trap. It's very much there. Whenever the mouse comes, come up. Okay. So that's a GTT. Simple. So active till triggered. We have understood this also. What is an AMO? Have you already discussed? Everyone, what is AMO? It will be like an aftermarket order. Let me just complete the type of orders. Okay. That's an aftermarket order. And what is a cover order? Let me quickly tell you. Simple it is. In cover order, it is when you put a buy or a sell order along with stop loss. Means what I did. If you don't pay attention for only 2 minutes, you'll get this right away. If you place a normal regular buy order, what happens? You place a buy order, it gets executed. End of the story. After 2 minutes, you feel, oh, I should put a stop loss order also. Can you put another order as a stop loss order? Yes. What are you doing? Everyone give answers. First, I place a buy order at 100. Our age-old example, you place a buy order at 100, and now you feel, I should place a stop loss order also. Stop loss order you place at 95. This is the second order that you're placing in the system. Everyone with me? Can these be two separate orders? One is a normal buy order, one is a stop loss order. Regular order, stop loss order. Agreed? One more type of an order is a cover order. What is a cover order? In one order only, you define this is my buy price and this is my stop loss price. Execute. It's like a 2-in-1. That's it. Simple. One last time. Whenever I'm talking about normal buy order and separate stop loss order, how many orders I'm inputting in the system? 2 separate orders. Instead of 2 separate orders, combine as a cover order. What is a cover order? In one order only I define this is my buy price, this is my stop loss price. That's a cover order. That's it. Nothing different. This is again only for the day. Yes, for the day. Sorry? You cannot? CO is only for intraday, huh? And you cannot cancel this stop loss. Why you cannot cancel this stop loss? Tell me. It's one order. It's one order. All in one order you are placing. Now you can't say out of this order just cancel this stop loss. Baki let it remain the same. Entire order can get cancelled. Only the stop loss leg of that cannot be cancelled. Logical, no? Had you put 2 separate orders, then you can cancel stop loss. Correct? With me? Can you modify the stop loss? You can modify the stop loss. You can't cancel the stop loss. That's what I'm telling you. No, still not. Finally, it's a single order that is being executed. You can modify it. You can't cancel it. Everything is intraday. CO. Entire CO is only for intraday. Not for GTT, not for delivery, nothing. Okay? Simple. CO is also understood. Instead of 2 different orders, you're placing a single order. Okay. So I'm going to take questions, but before that, let me just check. Documentation part, share certificate done. Contract note done. Charges involved. Types of orders, market limit. Stop loss limit, stop loss market. Cover order. AMO. GTT. What are stop loss orders? Now what is short selling? What is auction market and price time? So I'm going to go ahead with this short selling and auction market. But before that, maximum 3 questions. Yes, please. It will stay just like it is. Your losses, unrealized loss will keep on increasing. Listen. I'll just quickly quickly recap her question. She's saying in case of stop loss limit again, 100 ka buy price. I can say this in my sleep also now. 100 ka buy price, 95 is the trigger price, 93 is the stop loss. Stock came down to 95, it got triggered. Next tick at 92. Okay, goes down till 80. She's saying what will happen then? Nothing. You're having more and more of unrealized loss. Market closes. If you want to place, you can place a separate fresh stop loss order tomorrow. This stop loss order will get automatically cancelled at 3:30. After 3:30. Nothing will happen to your shares because it didn't hit the stop loss price limit. You heard it out. Can you say that GTD is for long term? You can say that, but you can also place a GTD for a short term perspective also. For example, you know that today market. So to be honest, yes, correct. GTD is generally from a longer term perspective, because ideally I would be putting GTD which are far away from the market price, at least 10% away from the current market price. Whenever it gets triggered, it will get triggered. But stop loss, I'm defining generally for a day. Agreed. Selling GTD order you want to put? Yes. She has bought 100. She has bought shares at 100 today, and she wants to sell it at 105. Correct. After 4 days, she puts a sell order GTD at 120. Let us say. Allowed. You can place GTD whenever you want. No problem. On shares previously purchased also, yes, no problem. Absolutely. Can we apply multiple trigger prices for different shares? Yes. So if you bought 4 shares, HDFC, Britannia, Asian Paints, and ICICI, you'll have 4 different trigger prices for 4 different shares. Absolutely. Very good question. She's saying that anyways I'm buying shares for a long-term perspective. Should I put a stop loss? My answer is no. Stop loss is a concept which is very important, especially for intraday traders or ultra short-term traders. For example, whenever I buy good shares, fundamentally very strong shares, I even don't look at that stop loss column. I'm least bothered with that. Absolutely. The summary point that I dictated, you want me to repeat that? The third point. I guess I said in extremely volatile situations, you should ideally put a stop loss market order. Okay? One last question. Earlier, he said when Corona was there, everyone, let us say he had put a stop loss whatever limit or listen. He's saying at that time, Corona level, he had put some stop loss limit market order, whatever it is, before Corona. And right now, you're asking, can you modify it? Dude, it's an intraday order. It can't stay for 2 years, right? It will get auto cancelled at 3:30. Now, if you want to place a stop loss order, fresh stop loss order, your choice whether stop loss limit or market. But like right now, it's volatile, so ideally stop loss market. Correct, no? Yes. Okay. So with that, let's move on to last 2 concepts. One is short selling, and one is auction market. Okay, this is a comparatively simple concept, not a difficult one. Just pay attention. That is it. A little bit different is what I can say, rather than difficult. Okay. Tell me in real life. Can I say this? I want to sell my helicopter. Anyone's interested to buy? Okay. I don't own a helicopter. Can I sell the helicopter? No. In real life, I can't do that, right? But in stock market, I can sell something which I don't own. This is something very different in stock market. I can sell something that I don't own. Condition is that I have to buy it before the end of the day. Okay, those who are advanced students, those who know about SLB and all that, we are not going to discuss SLB. This is the beginner's class. Securities, lending and borrowing. Okay, that comes in a little bit advanced concept. This is pure short selling that we are discussing right now. Okay, quickly tell me, simplest meaning of what is short selling? Sell first, buy later. If you want to write down a one-liner for what is short selling. What is one-liner for short selling? Sell first, buy later. But when you're writing buy later, into bracket what will you write? On the same day. Buy later, but on the same day. You can't take it to delivery. So it has to be 2 types. One more I missed out. 2 types of orders. I guess everyone knows it. Intraday and cash and carry. CNC. I guess I told this, right? First or second day, correct. Intraday means what? Same day. Cash and carry, like settlement. T+2 wala. If I'm talking about short selling, can it go in CNC? It has to be an intraday order only. Sell today, buy today only. Is this okay? When will you do short sell? Logically tell me. When you're bullish about the market or when you're bearish about the market? When you're bearish about the market, you will do a short sell. Is this understood? Yes. So what will you do? Let us say right now market has opened as a gap up, and you feel that this is temporary. It is going to go down only. Sell. And if it goes down, buy and make profit. That is the simple concept of short sell. Now what can happen? Sell, and market goes up further. Okay. In that case, you'll get a loss. That is it. But can you say I will wait for another 3-4 days and then I will buy? Why? It has to be same day. Okay. Now let me give you another. So stop loss is simple and clear. Yes. Many brokers do check this. If you just read the last paragraph, in equity market, you cannot carry forward the trade as short positions cannot be held overnight. Cannot be held overnight means what? Intraday only, na? Cannot be held overnight. Correct? If you don't exit into bracket buy, क्यों लिखा है? First you have sold, na? Sell first, buy later, na? So if you don't buy later, the securities before 3:20 p.m. then they will be auto squared off. So there are some brokers who will say automatically buy at 3:20 whatever is the price. Many brokers will offer that facility. But if a broker is, you got this point or no? I'll give a quick example if you want. I sold at 100. Okay. And I have forgot to buy. I went in a meeting and I'm in some different discussion only. I forgot to buy. What will happen? At 3:20, whatever is the price, automatically my broker will place a buy order and whatever is profit loss, whatever it will happen. Is this simple and clear? Yes. But sometimes, because as I said, this is not by law that every broker has to do this at 3:20. Some brokers may not provide this facility to you. In that case, it is, you have to remember, if you've done a short sale, you have to buy it. If you don't buy, then what has happened? It's a short sale, it's a short delivery. You have promised to sell, but do you have anything to sell? You have nothing to sell. Then you'll be penalized. Who will penalize you? SEBI will penalize you. And this is where it goes into the auction market. Whenever you sell and don't buy it back, you'll be penalized. Where? In the auction market. Okay. Can people like you and me enter? Have you ever heard your friends trading in the auction market? No. Why? Check out the timing of the auction market. It's from 3:30 p.m. to 4 p.m. So basically, will it be people like you and me who are trading in the auction market, or the brokers are trading in the auction market? They are the brokers who are trading in the auction market. Okay, so let's take this quick example. Rachna, I have sold 100 quantity, minus 100. Why? I sold, na? So minus 100. Did I buy? I forgot. So right now there is an obligation for me to buy it from somewhere and deliver those 100. Yes or no? I sold first. If I sold something, I have to buy and deliver it, right? But I don't have it and I forgot 3:30 over. I don't have the shares. Then what? My broker will buy it from somewhere and will deliver it on my behalf. Now please understand. I sold it. Selling price was at, let us say, 98. Closing price 105. Closing price is 105. I had forgotten to buy the shares. Who will buy it on my behalf? My broker. At what time? Between 3:30 to 4. From some other broker or whatever. See, again, I have never worked in an auction market. So I don't know exactly which broker will give. Don't ask that to me. Even I don't know. Some broker will offer it to another broker. From somewhere my broker will buy it. Generally at what price? Generally at what price? At the closing price. Did I incur a loss? How much rupees? How much rupees? 7 rupees loss. Okay? That loss I will have to bear, not the broker. Okay, contrary situation. Selling price is 98 and closing price is 90. Closing price is 90. Now what? Profit or loss? Profit. How much? 8 rupees profit. Do I get to keep that? Broker. That is known as IEPF. What is IEPF? Investor Education and Protection Fund. Ooh, what is that? Investor Education and Protection Fund. See, the name itself is the investors education. Many times you'll see that SEBI is keeping some educational programs free of cost. How do they get funded? Through this IEPF. I have taken many such programs on behalf of SEBI. More than 100. Would I do it free of cost? But very nominal honorarium I used to get. But where will SEBI pay that money from? From IEPF. Is this understood? So any loss which happens because of short selling, and which is the short selling where you have honored the commitment or if you fail to honor the commitment, fail to honor. What do you mean by fail to honor? Did you buy it on the same day? You forgot to buy it on the same day. And if there is a loss, who will bear it? The short seller will bear it. Profit, IEPF. Is this simple? Auction market. Again, to be honest, we should just know that auction market exists. Ask your friends who have been trading in the stock market for so many years. And has anybody's transaction gone in auction or not? Out of 100, maybe one you will find whose trade has gone into the auction market. Anyone out here whose shares have been auctioned? I guess none other than me. My shares got auctioned once. But this is way back when I was an article. I did not know what is an auction market till then. That was my mistake and that happened. Anyway, but I learned practically what is auction market. But again, other than that one incident, even my shares have never gone for auction. So you just need to know this as a concept. What is auction market? But I hope short selling is something which anyone and everyone can do day in and day out. But again, for whom? Intraday traders. For long term, invalid concept. For long term, this is invalid concept. Then you need, if you have kind of long term, 1 month, 2 months, 3 months, then you need to go on futures and options. Advanced level, not in beginner's course. Is this simple clear? Quick questions on short selling and auction. IPF. No, anyways, she's saying when will the settlement happen in case of such auction market? Everything goes into T+2 only. When will settlement happen? T+2 for auction market also. Why is there a concept of short selling? To make profits in falling markets is what I can say. Arey Baba, even if intraday facility is there, if you are not allowed to sell first, you are sure that the markets are, let's say today night something terrible news comes up in USA. Okay, you know for sure tomorrow morning 9:30 onwards, 9:15 onwards markets are just going to go down, and down. And you want to sell first. And this facility itself was not given. How would you have profited? Correct? So that you get this opportunity of making profit in falling markets. I'm repeating. So that you get an opportunity to make profit in falling markets, the concept of short selling was introduced. Got it? See, she's saying, how are you selling first if you are not owning only? You remember when I talked about intraday, does T+2 and all that happen? No, why? Or it's same day now, it's closing off then and there itself. That is why you can sell something that you don't have because anyways within the day it's going to get closed. You don't get any delivery. No delivery is given, no delivery is taken. I know it's very hard to digest, but you try to place a short sell order. Not really. No separate section. Directly go to orders, place a sell order. For what? That you don't own anything. Bindas. Charges are more for short selling. Huh. You're talking about F&O, kya? No. Normal shares it should not happen. No. You might have selected futures options by mistake. Otherwise, normal selling ke liye there are no extra charges. Or you might have entered huge quantity into so why such a huge amount? If you are placing only one quantity, again check. It is not higher amount. Okay. So I know for you to digest the concept is going to be difficult. Just try selling one share which you don't have and buy it. You can imagine something like this. Temporarily, someone is allowing you to sell it on the condition that you have to buy it before 3:30. Okay. You short sell. Okay, and you want to buy now, but there are no sellers only. Now what? No sellers only. I want to buy now. I want to buy, but there is no seller. What do I do? I thought you had asked a very nice question. You had done sell first, then you have to buy later. Correct? You had sell first, now you have to buy. From whom will you buy? From someone. But there are no sellers here. Now buy. How will you buy? You can't, because there are no sellers only. You can't buy from the air like this. There has to be some seller. In that case also your trade will go for auction. No. Upper circuit. No sellers, upper circuit, and very much possible. We have not discussed circuits today. Penalty म्हणजे त्याला आता तुम्हाला ते परत again. SEBI can, again that was more into admin stuff, how much and what. Maybe a little bit of penalty might be levied. Last question. अजूनही आपण SLM वरच आहात नाही. Coming to this now, okay. So what? Oh, okay. But then people are going to get crazily confused here. He's saying whatever trigger price we discussed, That was when we bought first. Just last 1 or 2 minutes. We bought first. We bought at 100. We bought at everyone. We bought at 100. My trigger price was 95. So lower than that. Correct? Yes or no? Yes. Now what is happening? We are selling first. We are selling first. So if I sell at 100, if I'm selling at 100, if you were to put a trigger price, should it be less than 100 at 95 or should it be more than 100 at 105 maybe? Where should the trigger price be? Wait. Trigger price is associated with which term? Stop loss. First of all, keep this in mind. Trigger price is related to stop loss. If you sell at 100 and if it is going down to 95, you are at a loss or are you at a profit? You are at a profit now. How can your trigger price be less than 100 then? Are you getting me? One more time. Trigger price is associated when you are at a loss. If you are selling at 100, if the stock price goes down to 95, are you happy or are you sad? You're happy, you're going to buy it at 95, end of the story. You made a profit of 5 rupees per share. When will you get scared? You sold at 100, you've done a short sale at 100 and it's going up and up to 105. Now you're saying, okay, enough. I don't want to go beyond that. Then you'll put a stop loss or a trigger price, whatever, at 105. Who was the person who asked that question? Who was this? Very good. Good question. So let us say you put a trigger price at 105. Awake. It was awaken at 105. Okay. Next tick at 107. And assume you have put a stop loss at 106. Let me see if we can give correct answer. This can be a little bit tricky if you have not understood the concept properly. If you think very logically, you will get an answer. I'm repeating for the last time. Let me see. This is my test now, not your test. My test. You have sold at 100. When will you be worried? If the price goes up. Okay. You're like, बहुत हो गया तो 6 rupees loss. Nothing more than that I want. So wait. You put a stop loss order at 106. Okay. You said maximum 6 rupees loss. Baba, other than that I don't want. You put a trigger price at 105. So 100, 101, 102, 103, 105. 105. Okay. Next tick at 107. Stop loss limit order. Will it get executed, yes or no? Will it get executed, yes or no? Very good. Push. You again covered order means what? 2 in 1. 2 in 1. Orange could have separated also. Had it been a SLM, execute. Very happy. Have you understood this? How many of you have attended USM 1.2? Have seen it on screen 1.2? Was this way too up as compared to 1.2? So many people actually ask me, what stop loss limit and market you have taught in 1.2 also and 2.2 also. But I believe that this explanation of stop loss limit market 2.0 is way better than USM 1.0 also. I always say this, even I as a person, I have learned a lot over the last 3 years. No? So even my understanding, my clarity, my level of teaching also improves over a period of time. So even I felt nice today after. And all thanks to you, amazing questions. Some very creative questions. But I'm glad everyone understood. This was actually a tricky situation. This was exact reverse situation. Still everyone gave a correct answer. I'm happy. Okay, so with that, one last question and then we'll stop. I think if it is regarding the same, then I think we should stop. Because whatever people have, they have 100% clarity right now. One more if, but then here and there, and everyone so you can ask me individually, I'll clarify, don't worry. Okay. Very nice question again. One last point. Like we can place a GTT for stop loss. Or it's not like a stop loss as such. GTT can be on a downward price. GTT can be also a target price. GTT for the. Okay, so for example, if you buy at 100 and if you want to sell, normal intraday only you are saying. Intraday. If she has bought at 100, she wants to sell at 105. Intraday. Okay, place a normal sell order. Normal sell order with limit, not market. You will say I want to sell at 105. Okay. And one more I'm telling you her analogy. You bought it at 100 and you say I wish I'm able to sell it at 120 someday. Put a GTT. In fact, this can be a combined order also. While you place a buy order, take the GTT and place a target price there. If your price is reached within 1 year, execute it. Zero allows that. Thank you. I'll see you all tomorrow. Till then, take care. Jai Hind and bye-bye.